Hello and welcome. Today, we're diving into a topic that is absolutely essential for anyone holding crypto here in the UK, taxes. We're going to get you completely up to speed and ready for the 2026 tax year. So, you're dabbling in digital assets. That's great. But guess what? You might just have a new silent business partner that you didn't even know about, and that's the tax man. Yep, if you've bought, sold, or earned any crypto, you've probably kicked off a tax event, and believe me, HMRC is paying attention. Now, to make sure you're getting the most accurate and up-to-date information, this entire guide has been put together by the absolute experts at My Tax Accountant. They live and breathe this stuff, helping people just like you navigate the sometimes tricky world of UK tax. We've got a really clear roadmap for you today. We'll kick things off by getting inside HMRC's head. Then we'll break down the two key taxes you need to know about. We'll look at what happens when you earn crypto versus when you sell it, cover the massive rule changes coming in 2026, and then wrap up with your clear next steps. So let's start at the beginning, shall we? To get this right, you first have to understand how HMRC, that's the UK's tax authority, actually views crypto. They've been very clear, they do not see it as currency or money, and it's definitely not treated like gambling. And that's a really important distinction, because it basically means your crypto profits are almost always going to be taxable. Because of the way HMRC looks at it, your crypto activities are going to fall into one of two main tax buckets. It really all comes down to how you got your hands on the assets or how you got rid of them. Getting your head around this difference is the absolute key to getting your taxes sorted. All right, let's break down those two main types of tax you're likely to run into with your crypto here in the UK. We're talking about income tax and capital gains tax. Put simply, one is for what you earn, and the other is for the profit you make when you say goodbye to your assets. Here's the simplest way to think about it. If you get crypto as a reward or as a payment for something, that's an earning event. That's going to be looked at for income tax. But if you sell, swap, or even spend crypto that you already own, that's called a disposal, and that falls under the world of capital gains tax. So let's get specific on income tax. What are we actually talking about here? Well, it's a tax on the value of the crypto at the exact moment you get it as income. This could be from mining, getting those staking rewards, getting an airdrop for doing a bit of work, or even if a client pays you for a job in crypto instead of pounds. Now, capital gains tax, or CGT for short, that's a different beast entirely. This tax isn't on the total amount you sell for, no, it's on the profit you make. It gets triggered when you dispose of an asset, and we'll see that dispose means a lot more than just selling. The key thing is you're taxed on how much it went up in value from when you first got it. Okay, let's dive a little deeper into those income tax events. This is all about the times you're not actually buying crypto with cash, but you're actively getting it through your own efforts or as some kind of reward. These are the usual suspects. Staking is a huge one right now, as are mining rewards. And if you get an airdrop because you helped promote a project or did some other task, that's income. And of course, the classic example, if a client pays your invoice with crypto, the value of that payment in pounds sterling on that day is your taxable income. Simple as that. Right, here's a pro tip that catches so many people out. Staking rewards. They might feel a bit like earning interest in a bank account, right? Wrong. HMRC classes them as miscellaneous income. Now, this is a vital distinction because it means you can't use your tax-free personal savings allowance against this income. A really crucial point to remember. This is a question we hear all the time. You know the drill. You open your wallet and, hey presto, there are some new tokens that have been airdropped to you, but you haven't done a thing to get them. So, is that income? And here is the all-important answer. HMRC draws a very clear line in the sand here. If you did something for it, a service, it's income. But if that airdrop was genuinely out of the blue and you did nothing in return, then there's no income tax to pay when you get it. But, and this is a huge but, be warned, capital gains tax will be waiting for you when you eventually sell or swap it. Okay, let's move on to the area where, honestly, most people get a bit tangled up. Capital gains tax. If you've ever put money into crypto, this almost certainly affects you, and the calculations can seem a bit daunting. And that's not all. Here's where most people go wrong. Before we get lost in the weeds, here is the number to burn into your memory for the 2025/26 tax year. £3,000. That's your capital gains tax annual exempt amount. It means you can make up to $3,000 in profit across all your assets in a tax year before a penny of taxes is due. So what on earth does HMRC mean by a disposal? Well, it's a very broad term. Selling for good old pounds is the obvious one, but swapping your Bitcoin for some Ethereum, that's a disposal. Using crypto to buy a coffee or a new laptop, you guessed it, that's a disposal too. And even gifting it to someone, in most situations, counts as a disposal.
Now, this is where it can feel a bit like rocket science. Let's make it real with an example. Meet Alex, a freelance designer based in Manchester. She's been smart, buying little bits of crypto at different times and different prices. Now she wants to sell some. How does she figure out her profit? Well, she can't just pick the purchase that gives her the lowest tax bill. Oh no, HMRC has very specific rules for this.
To solve this puzzle, HMRC has what they call matching rules. It's a 3-step process you have to follow in order. First, you match any sale with a purchase you made on the very same day. If there isn't one, you then have to match it with any purchases made in the next 30 days. Stay with me, this is where a bit of knowledge can be really powerful. If there's still a sale left over, it's matched against your Section 104 pool. Just think of this pool as a big pot containing all your older crypto buys, all averaged out to one cost. It just smooths out all the ups and downs of your buying history.
Let's see how this works for Alex. She sells one Bitcoin for a tidy £85,000. She might think her profit is based on a coin she bought years ago for way less. But she also bought another Bitcoin for £80,000 within 30 days of that sale. Because of that 30-day rule, she must use this recent purchase to calculate her gain. So her taxable gain isn't huge at all. It's just £5,000. See how that works?
Right, so once you've figured out your total gains for the year and you've knocked off your £3,000 allowance, how much tax do you actually pay? Well, it depends on your total income for the year. If you're a basic rate taxpayer, your crypto gains get taxed at 10%. If you're a higher or additional rate taxpayer, that rate doubles to 20%. So, if you only take one single thing away from this section, please let it be this. You have to keep meticulous records. For every single transaction, every buy, sell, swap, or reward, you need to log the date, the type of transaction, and its value in pounds sterling at that very moment. It is your absolute best and, frankly, your only defense if HMRC ever comes knocking. Okay. If you thought this has all been a bit of a gray area up until now, well, things are about to become crystal clear. There is a massive change on the horizon, and it will affect every single person holding crypto in the UK. This is a real game changer.
Get your diaries out and circle this date in big red ink. From the 1st of January 2026, the UK is bringing in a new global standard for tax transparency. It's called the Crypto Asset Reporting Framework, or CARF for short.
So what on earth does this actually mean for you? Well, under CARF, crypto exchanges based here in the UK will be legally required to collect and report all of your activity directly to HMRC. Let me say that again. They will report directly to HMRC. This means the era of hoping they won't notice is well and truly over. Transparency is the new normal. Okay, we have covered a serious amount of ground. So, what should you actually do now? Let's boil everything we've talked about down into a simple, clear action plan. Let's do a quick fire round of the 5 most important points. 1. Figure out if your activity is an income tax or capital gains tax event. 2. Remember that £3,000 tax-free allowance for the 2025-26 tax year. 3. Understand that disposing of crypto includes swapping and spending, not just selling. 4. Record everything. Seriously, everything. And 5, get ready because from 2026, HMRC is going to know a lot more about what you're up to. Now, it is really important for us to say this. The information we've gone through today is for general guidance. Everyone's personal tax situation is unique, so please do not take this as personal financial advice. At the end of the day, it really comes down to this. Getting your crypto tax wrong can be seriously costly, but getting it right, that gives you priceless peace of mind. With exchanges about to report directly to HMRC, the real question you should be asking yourself is, are my records good enough to tell the same story as the data HMRC is about to get? If you're feeling even slightly unsure about any of this, or you just want the confidence that you're fully compliant, then you absolutely must talk to a professional. The experts at My Tax Accountant are ready to help you get it right. You can give them a call on 0208 570 8531 or drop them an email at info@mytaxaccountant.co.uk. Thank you so much for joining us for this guide to UK crypto taxes. We really hope it's given you a much clearer path forward. For more insights from the experts, make sure you subscribe to the channel. We look forward to seeing you again very soon.